All right, guys. Good morning. Good morning. It is Wednesday. Markets are up this morning. We're starting to see a little bit of a turn, though. Campbell's Soup Company just reported earnings. I don't think this is dropping markets, just to preface it, but adjusted EPS of 62 cents. They expected 56 cents. Revenue of 2.3 billion. They expected 2.33 billion. So missed revenue. Guidance came in at 240 to 255 versus 263 estimates, so lower than expected guidance for them as well. Again, I don't think this is necessarily. This is CBP, Campbell Soup. They're down. What's really driving the market this morning is Google. Google was up after some good news over the last 24 hours with them. They had a recent antitrust ruling in favor of Google. It's a major catalyst. It ruled that Google does not have to divest Chrome and can continue certain partnerships, giving Alphabet a 5.8%, almost 6% gain in pre-market. Apple's up almost 3% on relief regarding its Google search deal as well. And so Google, Apple up after this news. Zscaler is up 3% after beating earnings estimates and issuing strong revenue outlook. Nvidia is slightly green on the day as well. It's at 171.50s. So Nvidia is up also. And you can kind of see gold is still around all-time highs, if not breaking all-time highs. So all-time highs were hit early this morning at 36.16. We're at 36.13. So we're still pretty close to all-time highs with gold. Gold's pushing. Yeah, that's what's going on in markets. Treasury yields are still higher this morning. If we take a look at these, I mean, they're not that high. Hold on, let me look. I mean, they're elevated on the day, or actually they're slightly down on the day. So here's yields right now, 10-year Treasury yields. 30-year yields are over 5% briefly, or at least they broke 5% briefly. Tariff uncertainty, Fed independence threats, causing people to worry. But yeah, I mean, look, here's where we open the day at about 4.285. We're at about 4.281. So actually a little bit lower, to be honest, today. We take a look at it, but we're still pretty elevated over the last few days in September. September yields are certainly up. If we take a look at Fed rate expectations here, still at 92 to 8% likelihood of a cut this month in September on the 17th. Yeah, Bitcoin back up to almost 112s or right around 112s. What's up, Sam? What's up, Real? What's up, Ryan? Pew. Details. Amor. Ray. Day. Hunter. Fibonacci. Trey. Alyssa. Caesar. Elliot. Ava. Ed. Egan. What's up, guys? Good morning. Hope you guys are doing good today. We got the JOLTS job report today. We also had mortgage rates show up a little bit earlier, lower than last time. They showed up at 6.64%. Last time they were just under 6.7 at 6.69%. So the MBA 30-year mortgage rates did show up lower than expected. Mortgage applications decreased 1.2%. And so yeah, mortgage rates going down a little bit. Yeah, we got jobless claims tomorrow. We got the non-farm employment, like the prelim payroll data tomorrow. We got the we got the first look at the payroll numbers tomorrow with what's called the non-farm employment change. Yeah. Again, Bank of America also lifted its price target on Apple, 4%. Apple's up. A Bank of America analyst lifted Apple's price target to 260 from 250, kept a buy rating. The DOJ Google antitrust ruling was seen as a win for Apple as Google can no longer so it's seen as a win for Apple. Again, so this morning, Google up 6.5% almost, Apple up almost 4%, Tesla up almost 2%, Meta up almost 1%. So green tech this morning, kind of a rebound. We really, like, if you take a look at what the markets have done, like, here's the SPY. We basically rebounded and ate all of this drop. And I told you guys yesterday, or like yesterday morning, that this was a possibility. That it's possible that we drop and then squeeze out all these shorts. And it looks like that's what's going on because we ran most of the, towards the end of the day yesterday, and we got all the way up to over 640s. So September not looking so slumpy anymore. We'll see if it continues. Yeah, today we got JOLTS. No, jobless claims are tomorrow. Listen, this is how it goes. Jobless claims are tomorrow. The non-farm employment change data is tomorrow. And then I think we got more data tomorrow too. So yeah, tomorrow at 8:15 we got the non-farm employment change. It's expected at a pretty low number at 73,000. Last time it was 104. We got import-export data tomorrow. Trade balance data tomorrow as well. We've got jobless claims, unemployment. We got non-farm productivity all at 8:30. And then we got services PMI at 10 and 9:45. Yeah, I see this thing where like people like, listen guys, like I see this thing where people for some reason they make bearish predictions short term, and it's short term. Nobody freaking knows which way the market's going short term. Market can go up, down, sideways, doesn't matter what's going to happen. And so one of the things I see is people so confident in short term predictions, and you got a 50-50 shot. I mean, maybe you're right, maybe you're wrong, but you can't really get mad at short-term predictions either, you know? Like, market's gonna do whatever. Like, you could be bearish long-term, short-term has nothing to do with that. Not nothing, but very little to do with that. We could be super bearish short-term and then run. You know, we could be super bullish short-term and then crash. It doesn't really matter. And you don't want to be too tied to a short-term prediction. That's risky. Yeah, today we got the JOLTS job opening report, which is a preview of jobs. Right, we got the JOLTS job report. So let's do a poll. I don't think I did one yet. Does the market hold full action today, or does the market continue its run up this morning into the open? Yes or no? Does the market continue its run up this morning into the open? Yes or no? Yeah, I mean, we might buy a little pullback this morning. It doesn't mean it's gonna work, but we could try. If we can get a dip to like 425, I'm gonna buy that. Maybe like 427. Actually, 427. If we get a dip down to like 420s, I'll probably start to scale into some positions. I like there's a decent amount of support around that area historically on the chart. We're in a bullish trend. If we can get some moves down to like here, I'll look at it. But I need a dip. I need to pull back. So European Union regulators are set to pause subsidy probe into ADNOC's Povestro deal, according to Reuters citing sources. Yeah, I see open. It's at 550s. It looks good, 540s. Open looks good. I mean, I don't know what it's going to do. It's a pity stock. I'm not going to mess with it. It's too cheap for me, but... All right, we're starting to get that pullback. I'm going to take one little position here. I'm going to start it here. I'm going to add maybe up to 4 contracts down to really 425 is what I want. We'll see if we get it. Very small position so far. I'd like a little bit cheaper entry if I could get it. I think this is good. All right, we got 2 micros, very small still. All right, we're basically flat right here. See what happens. I'd love to see a big bounce back up to like 450s is ideally what I'd like. I might also take a little bit of profit if we bounce strong enough here. McDonald's and Walmart have been added to Goldman Sachs' U.S. conviction list. Viper Energy and INSM have been removed. Yeah, I've heard the news regarding could be a trap. I mean, you never know. Yeah, I'm looking for a rebound. We've been downtrending, but you never know how long this rebound's going to continue. I'll add a little bit more at 430 if we can get it, but we're flat right now. All right, we're at about 430. I'm gonna add to that now, but that's a squeeze down. Let me make sure I'm not in trouble here. We're right about where I said I want to buy it, but that's a big red candle. Yeah, I'm gonna start cutting some of this. It's just too big of a drop, I think, quickly. Like, it's one thing if the candle's not that big, but if the candle's that big, I think I gotta just start to scale out. Here's my level, though. We'll give it time to bounce here. But I'm not the most confident in this thing now. It is September, no, for sure. It's a small trade. I mean, look, I might lose $30. And so, I'll be okay from this one. I only have 2 micros now. And so, I can let it play a little bit, but I want to give it a chance to get back up there. Sometimes it gets to these levels and then it rebounds, but either way, you don't love to see it. You don't love to see it. Honestly, yesterday was a really good day, though. So we've been, honestly, in both of my main accounts, we have 3. But in both of these, I've been making tons of money the last few days. It's been very easy. I gotta see if there's any catalysts coming out this morning, too. It's now 7:30. Yeah, I just gotta cut it. Let me get all the way out of this. It's probably Google giving a little bit of it back here, look. And then I got an hourly chart on the SPY here. Nvidia pulling back a little bit. You can't win them all. Is Macy's still a stock? Macy's is up. Honestly, Macy's is the only department store that I see that's incredibly resilient. You know, JCPenney, it's over with. You know, Sears done a long time ago. Macy's is one of those big stores that people still shop at, you know. I'm not saying it's going to survive that long, but Macy's is holding strong. It's at 15.20 this morning. All right, so it looks like I got out in time. This looks catalyst driven to me, personally. This looks catalyst driven. I don't see any news though, so maybe it's not. It'd just be technicals, fear. But I'm glad I got out. I started scaling out right around here, but the big red drop. Let me know if you guys see anything. I don't see anything coming out on the news wires though. Dollar Tree posted earnings. Dollar Tree's down. Macy's posted earnings, they're up. Campbell Soup, CBP posted earnings, they are green a little bit. REVG, Sprinkler. Wait. Sprinkler. Okay. Software company. Maybe somebody knows something. And we're seeing some early sell-offs for September, early in pre-market. Yeah, plug. 10 a.m. Eastern time. 10 a.m. Eastern time is when it is. Madrid. If you're a soccer fan, I've been watching Ted Lasso. Great show, honestly. I love it. My wife likes it too. Ted Lasso is just a good show. I'm not even a big like soccer fan. Like I've never watched a game like a full game of soccer in my life on TV. But I almost want to watch it now after watching Ted Lasso. You know, it's just good. Yeah, Palantir's up. A lot of stuff's turning though. A lot of stuff's green and then turning. So we're down a little bit this morning. We're okay. We've had a bunch of winning days in a row. Let me actually check my stats here. I gotta see how many winning days in a row I've had. Okay, so this was actually my first losing day. Hold on, let me see. Hold on. Gotta check August. Yeah. Okay, that's my first losing day in 4 days on this account that I'm on right now. And then in my other account, here's my graph in my other account that I'm trading. It's all pretty solid. It's ups and downs for sure. But like, here's the start of August. You know? And then here's the same account in terms of net daily P&L. Look at that rebound. And so I guess it was probably time for me to lose on that other account this morning. Look at this bounce back though. Could have stayed in it. It's just too risky too with this big red action. I'm not going to mess with that. Yeah, big swings in pre-market this morning early. For it being 7:30 in the morning, it's big ups and downs. I'm trying to see if there's anything going on, but I don't really see anything. Y'all hit that subscribe button, hit the notification bell. My channel's seen a pump lately. And again, we're going to keep growing. You know, if you don't like my channel, it's going to hurt because we're going to keep growing faster and faster. And I appreciate you guys. Cheers to you. Thank you guys so much. Hit the like button, hit the subscribe button. We cover all the stuff going on in markets as soon as it happens for the most part. We try, at least. Again, we did have mortgage rates show up. The big news this morning, in terms of bullish news, is that Google had their non-compete or their lawsuit dropped for the most part. It was the recent antitrust ruling in favor of Google, big catalyst. It ruled that Google does not have to sell Chrome and can continue certain partnerships. Google's up almost 7% this morning. Yeah. Yeah, I mean, after all this volatility in these last few candles here, I gotta just wait. I gotta wait for this. It's a little bit too shaky for me right now to trade this. All right, so the wait. Yeah, so money supply for India came out at 9.8%. JP Morgan Treasury Client Survey, short positions rise 8 percentage points to the highest since February 3rd. Longs rose 2 percentage points and neutral fell 10 percentage points, according to JP Morgan Client Survey yesterday. Yeah, all good, Sam. That's how it goes sometimes. I'm top 3 most biased, Martin. In fact, understand all this stuff on screen. I can't guarantee anything. I'm not an investment professional. Don't copy me. I might have no idea what I'm talking about. I'm not liable if you lose money. Nothing here is investment advice. Don't copy us. Now with that said, let's see if the market in tech holds, right? I think after almost 4 years, I might finally be able to read the NASDAQ to a reasonable level of confidence. Yeah. Well, I think the trend is green, right? Which is why I was trying to buy it right here. I think this was just a shakeout, though. You know what I mean? Like, this is a big drop really quickly. Probably the biggest drop we've seen all morning since, like, back here at, like, 2 a.m. And so, I'm not saying I should have bought there, but I think I just got a little unlucky with the timing. But for us to drop like this and then immediately rebound back up, that's pretty fast. That's pretty quick. And so at this point in time, it still looks like we're in an upward trend, in my opinion, but trends aren't guaranteed to hold. And I think markets are happy about the tech news that came out overnight, and they're just kind of holding on to that and driving an upward trend this morning. We'll see when we get closer to the bell. We'll trade some. Well, I'm not liable if you lose. And you'll probably lose if you copy me, because I get in and out quick, you know? And so it's going to be hard for you to copy me without losing. So copy at your own peril. Yeah, this is my stats for the month of August. It's pretty good, right? We had, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 trading days total in my funded account. In this one, we lost in 4 out of 15 of those days, right? And what you see is that my winning days are noticeably larger than my losing days, which is good, you know? So that's my month of August in trading. Pretty solid. I'll take it. Green is good. You know, more winning days than losing days for sure. And my winning days are larger than my losing days, which is good. Yeah, Apple news is certainly driving market. Google news certainly driving markets. Apple's looking strong. I want to buy this, to be honest, but I'm not going to do it. HSBC raises 2025 year-end target for the S&P index to 6,500 from 6,400. So that just happened. Are bulls back in control? Let me look at my poll. I did a poll earlier. I asked people, does the market continue its run up this morning into the open? 68% say yes. 32% say no. Yeah, there's a little bit of one. Well, Bitcoin's been up the last day or two, but it's down net over the last month, weeks, whatever. Something is tanking. Yeah, like I said, I wanted to buy this, but risk management wise, I just had to wait, I think. Gold is the big story of the day. It's not, I mean, Bitcoin and gold, I think, but gold, man, all-time highs again. They'll run it up. Yeah, Marvel had some news this morning, I think, too, right? Let me see. Yeah, so Marvel said yesterday that its CXL memory expansion controllers and near memory compute accelerators have successfully completed the interoperability testing, marking a key milestone for the product line. The structure platform is now verified to work with DDR4 and DDR5 memory from Micron, Samsung, and SK Hynix, as well as the industry's two dominant CPU architectures, AMD EPYC processors and Intel's 5th gen scalable platforms. It makes Structera the only CXL 2.0 product family to clear interoperability testing across all three major memory vendors and the leading CPU providers. So that's the news that came out with Marvel. So they're up over the last few days, but they're down net from earnings, I'm pretty sure. Earnings came out on the 28th, and they did not react well. They're down to 64. Maybe there's worth buying here, though. You know what? I might take a little bit of Marvel where it's at now. Let me see how big it dropped. It dropped pretty big percentage-wise. Down from... I'm not telling you to buy it. Do not copy me. I'm not an investment professional. I genuinely have no idea. Hold on. Let me look at the PE ratio real quick before I decide to just randomly buy this. Hold on. What's it at, like 64? Yeah, they had negative EPS though. 12-cent loss per share. Yeah, I don't know. I don't like buying losing companies. I retract my previous statement. I'm not going to buy Marvel here. And I know it might go up and it might do well and all this stuff, and that's good. Here's the problem. And the margins are getting better for Marvel here. But, wait, hold on. The margins are getting better. But what did it show up as with its earnings? What the heck just popped up on the screen? Oh, I see. I'm not gonna buy Marvel. 28th. Now Marvel beat EPS. They're profitable. Okay, maybe I will buy them. But they don't really have. They see quarter 3 guidance at 69 to 79 versus 72. See sales at 1.95 to 2.16 versus 2.1 expected. So their sales guidance was a little light, is what this was, probably dropping them. I might buy a little bit. I retract my previous statement again. AI was wrong. Marvel, the last 3 quarters have been better and better in terms of its EPS. So they've had 3 profitable quarters now, which is good. I'm going to buy a little bit of them. Very small percentage. small. Maybe a little more. All right, that's it. I bought some Marvel. Here's Marvel now. It's up a little bit today, but it's mostly flat. I'm buying it here because it's down a lot. It was at $80. It's down 25% from 80 down to 60. A little bit less than 25% now, but yeah, we bought a little bit, just a little bit. Don't copy me. You might lose. You'll probably lose, I would say, but don't do it. Like, I buy small enough positions to where if I'm wrong, I'm okay. Really, like every trade I bought over the last 4, 5 trades, 1, 2, 3. I'm still in a little bit of each. Very green portfolio. Almost everything I think honestly everything I bought in the last month in terms of swing trading made me money. I'm pretty sure. Right? I bought Crocs, Hims, PayPal, Target, Apple, Amazon, and all of those made me money. I'm pretty sure. I have to back check this. I took most of these off, but yeah. I'm not saying Marvel's gonna make money either. It's down a lot. Am I biased on Marvel? I mean, I wouldn't say I'm super biased. I took a small enough position to where, you know, I just weigh the risks. Like, you could always get unlucky here. Like, if the whole market turns and it drags Marvel down, I would say that's unlucky. But I think Marvel's down, again, 25%. Marvel's at $85 a share. July 30th. It's now at $65 a share. That's a pretty big pullback. The likelihood that Marvel's going to drop another $10, $20 a share is lower. It's not nothing. It could certainly happen. I hope it doesn't. I'm going to put it out into the universe that Marvel's going to rebound and continue up and hit 70 soon. But you never know. You never know. And so the position's small enough to where if that does happen, I can laugh about it and just sell. And I'll be all right. Again, so HSBC raises 2025 year-end target for S&P index to 65 from 64s. Gold has been the story of the day here. Markets are kind of weird in terms of price action. Hey, what's up, Manny? Yeah, and I think whenever, like, we're so elevated in regular, like, Mag 7 stocks, it means probably we should look for other opportunities. And so I don't really like buying Mag 7 right now. I think they're too elevated. Too much fear. But yeah. I'm seeing somebody that's saying to take 25 grams of creatine. That seems wild, right? There's got to be negative effects of that. I'm certainly not recommending anybody do that. I don't know. All right, we're coming back down. Let's see if we bounce at this 425 level we talked about. I don't know anything about creatine, by the way. I mean, I take the gummies, but... What's good stock to buy for long term right now, John? How long term? That's my question to you. How long term are you talking about, brother? You talking about like long term, like decades? There's probably a lot of good stocks to buy long term. Short term? You talking about under 5 years? What are you talking about? Gotcha, Jay. Yeah, I actually looked it up and it says it's not the worst for you. I don't know if it's good for you, but 3 to 5 years, that's a relatively short period of time, Buddha. I have no idea, to be honest. 3 to 5 years is short term in markets, you know. And so I don't know. I don't know what you should do there, to be completely honest. No idea. Yeah, I like tech, but tech a lot of people consider tech elevated right now. And so I like tech, but again, people consider that like super elevated. Yeah, I mean, again, 3 to 5 years is much harder to predict. Like if we're talking 15, easier to predict. 3 to 5 years, a lot of good and bad things can happen that drag markets in one direction. 3 to 5 years is not a long time in markets. It might seem long time because people are used to day trading or swing trading, but 3 to 5 years is relatively short. And so there's more variance. The shorter time frame it is, the more variance it is. The longer time frame you analyze, the longer or the less variance there is. I mean, so I think Microsoft's pretty safe. Amazon, I think, is probably okay. Pretty safe. Again, I'm not an investment professional. I have no idea what I'm talking about. Nothing here is financial advice. Don't copy me. But yeah. If you want to diversify, there's like Home Depot. I like Home Depot stock. I think Home Depot's resilient to mail order shipping for the most part. And so I think it's a little bit more resilient than a lot of other companies that sell things in stores. Yeah. And outside of that, you know, there's variance. It's risky. Any of these things are risky that I'm saying right now because 3 to 5 years is not that long. We don't know what's going to happen in the economy in 3 or 5 years. We don't know what's going to happen to inflation in 3 and 5 years. We don't know what's going to happen in general. And so you just got to be smart and diversify. Yeah, 20 years is different. 20 years is wildly different. Lululemon. Lululemon, people are less interested in it, man. It may be pumps, but it's not something like, it's a fashion company. And one thing that's objectively true over the last 50 years is that fashion changes and trends change. Each new generation doesn't necessarily want to wear what the previous generation wore. And so because of that, fashion brands are incredibly unreliable. Unless we're talking about a couple isolated companies, like maybe Nike, maybe some of the upper brands, the big brands, but even they're risky too, I think. Coca-Cola, yeah. Coca-Cola sideways for a year now, though. Almost a year. I've been saying, listen, anybody that's listened to me about Lululemon, I've been saying this since Lululemon was at $500 a share, and people would get mad at me. And that's how you know it's confirmation bias. Like, they want to believe, and like they're holding it, so they're more likely to ignore the red flags. They end up getting mad at the messenger, which is me, instead of thinking about what I'm telling them, you know. And that's just emotional, right? Like, maybe I'm wrong. If you guys tell me you don't like something, I'm not mad at you for it. I'm really not. And I think Lululemon is one that's incredibly clear. It's obvious, right? Like, big, again, you got to look at the history of it. You got to look at the story behind Lululemon. Lululemon got big after 2020. Why? Because everybody was stuck at home. right? So what became popular when everybody's stuck at home? Athleisure, leisure wear, like sitting at home in sweatpants and spandexy pants and all that stuff. That's what was big, and so they thrived for years because of that. Eventually that trend's changing. I'm even seeing younger generations critique what's the pants? Yoga pants. I'm seeing younger generations now critique yoga pants. So people aren't even wearing the same styles anymore because why? Trends change. And so investing in Lululemon when it's at its peak levels, when it's at $500 a share, it just seemed like a silly bet, like a risky bet. And since then it's dropped 60% since then. It's a pretty easy story to see. And because of that, I'm not really interested. Maybe down here Lulu might be cheap where it's at now. I don't know. There's possibility that it bounces back up here. It's certainly possible. At least some. But I don't want to buy it at $400 or $500 a share. I think that's dumb. Personally. And maybe I'm dumb. I don't know. I think Nike's been incredibly resilient for 40, 50 years. And so it's a little different. But I wouldn't say it's necessarily safe. I think what Nike has going for it is that the younger generations like shoes. And they like reselling shoes. And so there's these big markets that are propped up from Nike. And so there's an incentive to keep Nike popular because of that. Right? And I think that's what we kind of see going on right now. And so Nike's a little bit more resilient than others because of that dynamic that I just said. European Union Seth Chofik says they're going to travel to India later this month. China's MOF and PBOC are going to hold a joint working group meeting. Yeah. KO's always treated me well every time I bought into it. Paid nice dividends too. And so I haven't hated KO. Market's kind of sideways now. And again, the story of the day is Apple and Google rising on Google's favorable verdict. Google had a favorable verdict. It's not going to have to sell Chrome. And so this verdict is benefiting both Apple and Google, and Apple and Google are rising this morning, dragging the market all the way up with it. Things have rebounded a lot from the red fear drops that we got yesterday at the opening bell. And so we do see that. All right, there's the 8 a.m. scrum. We can kind of see a pump here. We are rejecting right here a little bit, but we might continue back up. Again, Apple's still looking pretty strong right at the VWAP. Google still consolidating up there, but both of these are very, very green on the day. Yeah, 10 a.m. Eastern time is when JOLTS report shows up. Look at this level reject here. Ulta. You know, here's the problem. I like investing in things I understand. And one business I do not understand is makeup and beauty. It's just not my niche. I just don't understand it. And so I don't know. I've been to Ulta. I have a wife and daughter. I've been to Ulta a lot. Is Ulta the one that like there's too many lights and it's and like they've got it's like in malls and there's too many lights and every time you walk in there it's like a freaking overstimulation craziness. And there's lights everywhere and you can't see anything. And it smells like perfume and like you can't really... I don't like it at all. Then there's the other one that's more chill. A little bit more dim lights. I get them mixed up. There's Sephora and then there's Ulta. One of them's in the mall and it's stressful, and the other one's more chill. It's usually not in the mall. Sephora? Okay, gotcha. Yeah, I really don't know. I know one of them's stressful. And then the other one is less stressful. Maybe I should bet on the less stressful one. Or maybe the more stressful one's better for business, because it's higher pressure. You know? I don't know. One of them has big bright lights and mirrors everywhere. And I mean, I think they both have mirrors everywhere, but one of them has like big, it's bright. It smells like straight perfume. It's smaller. Another one, the other one's bigger. I guess it depends on which mall you're at. Oh, Bath and Body Works, dude. I go in there, I get a headache. Although I do like some of the smells. But I go in there, I get a headache. Yeah. Dude, stuff adds up in there too. You buy like 3 little things, it's $300. Oh yeah, you're gonna experience it, Pawn, for sure. It's fun though. Let them do their thing. I get it. I like going into Best Buy. I'm sure it's kind of the same feeling. I like going into Best Buy. All right, gold just tapped highs again, I believe, right? Wait. Yeah, gold just broke all-time highs just now. Yeah, gold just broke all-time highs now at 36.1760. The new all-time high in gold, 36.1780. It looks like we might test it again here. Gold just broke all-time highs again. Still pushing up. Is Bed Bath & Beyond really trending on the NASDAQ? It is. Bed Bath & Beyond is a stock again, guys. Look at this. Bro. I had some fun times covering these moves in Bed Bath & Beyond. But honestly, there's nobody ever in there. The problem with Bed Bath & Beyond is fundamentally flawed in business. Their business is, what I meant to say is their business is fundamentally flawed. Right? When you consider stuff that you buy, like if you think about all the stuff that you or your family now buys on Amazon, and then you look at what they sell in Bed Bath & Beyond, it's the same stuff, right? You want to know why Bed Bath & Beyond has fell off a cliff in terms of business in the last 5 to 10 years? That's why. Because everything you buy at Bed Bath & Beyond, you can now buy on Amazon, and you don't have to drive anywhere for it. That's the problem. And yeah, I don't know why they're back public. They should have just kept it private unless they're just really struggling to make money. What's Bed Bath & Beyond looking like for their EPS now? Yep, I mean, this was the last time we saw Bed Bath & Beyond right here. Right? Here's Bed Bath & Beyond. This is the last time we saw him. This is exactly what I said. Look, here's 10 years, right? 10 years ago, really it's this one, but their revenue fell off a cliff. Why? Because people buy this stuff on Amazon now. I've been in a Bed Bath & Beyond in the last 5 years. Nobody's in there. Yeah, I remember Bed Bath Beyond the stock. I covered this when it did its big squeeze, and I told people I didn't trust it. I told people I didn't like it at all. and then it got delisted, went to pink sheets. You know, I'm surprised it's back. Again, I'm genuinely surprised it's back. Some people just like to get out the store or get out the house and go shopping. Not sure if bed. Yeah, I think that's probably true. But I still think it's gonna struggle. Yeah, it was a meme stock for a while, Bed Bath & Beyond. That's why I'm looking at it. Anyways, Nasdaq starting to fight higher here again. Apple, Google, propping the market up today, helping the market after a favorable ruling. They don't have to sell Chrome anymore. Yields are slightly down on the day, actually, at 4.273%. All right, guys. Ugh. The date is at 10 a.m. Eastern Standard Time, Sam. I don't know what time that is over there, but 10 a.m. Yeah, gold broke all-time highs, new all-time high in gold, 316.1860. And so you can see gold right here on the right. I will draw it. I've got the greatest handwriting ever here. Look at those skills. Gold broke all-time highs. Okay, so the EU's trade chief, Šefčovič, says they fully support the antitrust investigation into Alphabet or Google. Come on, man. Don't try to push Google down now. Let it rise. Again, JP Morgan Treasury shorts at the highest since February. We talked about this earlier. Their latest client survey shows U.S. Treasury short positions jumped 8 points in the week ending September 2nd, the highest since February 3rd. Long positions rose 2 percentage points, while the neutral positions fell 10 percentage points, bringing net longs to their lowest since February. A lot of shorts in markets right now is essentially what this is saying. If Apple and Google hold here. Yeah, Bitcoin's trying. The data is relatively important. Like, JOLTS is a relatively important report that might move markets. Shorts are scared? Yeah, possibly. Hey dude, how you doing, man? Love you, buddy. Good day, dude. I've got this thing that's surprisingly shocking. I can't really tell you guys about it because y'all are the internet, but it's a good thing, but it's kind of surprising. How is this book like this? Never mind. Weird. I'll show Pawn it right now. All right, guys, so we're starting to creep up. We're holding a little bit here. Dollar Tree CEO says household earnings more than $100,000 a year provided a meaningful portion of Q2 growth. Customers seeking value and convenience more than ever. Tariff impact has shifted to later in the year. Timing played out differently than expected. Macy's in-quarter inventory is down 0.8%, indicating favorable inventory composition heading into the fall. I've been trading today. U.S. Defense Secretary Hagseth of Venezuela says video was not AI, declines to say how the strike was carried out and won't stop with just this one. Shorts are going to pivot in October. Great time to buy the dips. Yeah, I mean, maybe. The problem that you see in markets, guys, and this is why, like, I try to kind of trend away from this. All right, wait, hold up. So the Swiss government says it supports parliamentary initiative for urgent extension of short-time work subsidies in response to U.S. tariffs. This might impact gold. An overall economic slump from U.S. tariffs is not foreseeable at present. Okay, so they don't think the tariffs are going to have any meaningful impact. Maddie, look at this. All right, sorry guys. I know I'm talking to my daughter. You'll be all right. Hey man, I'm just curious if you know your win rate and if you're comfortable sharing that. Yeah, I mean, I'm gonna preface it with my win rate varies a lot back and forth because that's how win rates. I can't pronounce rate. Win rates. That's how win rates go. Nasdaq rebounding, gold pulling back a little bit right now. But yeah, so hold on, let me exit out of this before anybody. Okay. Again, I can show you this is my win rate in the main account. I would say I trade for the month of August was, where is it at? My trade direction percentage in terms of shorts versus longs was 49.77%, which meant I short a slightly more than I went long, but I'm basically a 50-50 split. My trade win percentage is 62%. 62%. I got a profit factor of roughly 2 to 1. In my other accounts, hold on. Okay, so I've got 3 main funded accounts that I trade. In one of them, my win rate right now is 75%. In another one, it's 62%. And another one, it's about 58% is the win rates that I currently have in the account. I am currently green in 2 of them, like net profits in 2 of them, and down in 1 of them. All right, look at gold pull back a little bit. I wonder if it's pulling back on the Swiss news. I know they came out saying that it wasn't going to impact gold sales, but yeah. No, this is gold futures is what I'm looking at. I trade the micro NASDAQ mostly in all of these. All right, so the president-linked crypto venture American Bitcoin is set to list shares according to the Wall Street Journal. ABTC is going to be the symbol. Again, this is from Live Squawk right here. In terms of non-farm payroll estimates. So again, this is from Live Squawk in terms of non-farm payroll estimates. The median estimate is about 75K, which is pretty low. Unemployment expected at 4.3%. TD has it at 25, Citigroup 45, Goldman 60, 68, 70, 70, 70, 70, 75. Lloyd's has it as 105. Deutsche has it at 100K. JP Morgan has it at 96. Santander has it at 95K. Bank of America 90K. Capital Economics 90K. Wells Fargo 90K. BNP for roughly 75. So a big range here. But overall, I would say these are pretty low expectations for payrolls on Friday. The median estimate is about 75,000. Unemployment median estimate is about 4.3K for Friday. And so that's worth paying attention to. Rest in peace to the guy that shorted Google. I'm telling you guys, listen, man. I don't know who it was or what they were doing. I really don't. But it's incredibly risky to short the strongest companies in the world, bro. Everybody wants to be the next big Michael Burry short predictor. And I get it. And so they watch the big short and they want everybody to think they're contrarian and intelligent. And they see things other people don't. And so that confirmation bias drives them to betting against some of the strongest assets in the world. And it's a losing game for most people. Maybe some people can do it. That's fine. I'm not going to try. I don't think the edge is big enough to justify the risk in shorting Mag 7 stocks regularly at the top when they're the strongest. I don't like that at all. People forget that most of the time at all-time highs we continue up, not down, right? So people have this misconception that at all-time highs we have to drop. And that's not true. Look at all the times, like, look, here's the S&P 500 in a long-term chart. Look, we get up to all-time highs. What generally happens? We get up to all-time highs. What generally happens? You know, even here, like all-time highs here and here and here and here and here. And so, like, if you want to try to catch this, that's fine. But it's a much more risky endeavor. And you got to keep things tight. Set stop losses. Just be smart. Yeah, no, I think if you got to do it, you got to get in and out quickly. I think the longer you hold a short position, the less likely you are to make money. And again, I'm not saying, this is just my own like mentality about it. I'm sure there's certain people that can do it successfully. I really do. But I think people overpredict crashes and drops as well. Like, and this is very obvious. Hey, what's up, Lightning? Like, listen, you buy at the wrong time in a Mag 7 stock, you can usually DCA and come out ahead long term as long as you got the bankroll for it. The opposite is true for shorts. And I think if you're going to short companies, I'm not shorting Mag 7. I'm going to short like Lululemon. I'm going to short like companies where the story makes sense to short it. And I'm sure some of these shorts think the story makes sense to short Google. But Beyond Meat, you know, like there's a couple companies that I did not like over the years that ended up dropping. Beyond Meat, Peloton, Lululemon. Because I think there's some obviously like overextended, overhyped companies, but they're usually not Mag 7. And if they are Mag 7, it's a riskier thing regardless. Okay, guys, so this week, again, yeah, Beyond Meat, they don't have the customer base that are interested in it. I've said this probably 50 times on my stream, but I'll say it again. Beyond Meat, the issue with Impossible and Beyond Meat is that vegans are incredibly health conscious. They don't want to experiment with lab-grown meat, you know? And so you're losing their business right there. And then you're competing with actual people who eat meat. And they're just going to choose a steak over your fake steak most of the time. And so they don't have the customer base they need to really thrive. They got incredibly overvalued in a short period of time. Now they're $2.40 a share. And I think it was predictable. Like, that's the type of stuff you should be... No, I'm not telling you to short it now. I don't think the time to short it is now, to be honest. That's the type of stuff you should have shorted 3 years ago. And it's usually not Google or Amazon or Apple, you know? Who buys $200 sweatpants? Wealthy people, generally. Mondelez says company is aiming for roughly 4 to 5% organic top-line growth and 10% decline in EPS, according to Barclays Global Consumer Staples Conference. All right, let's see if we hit this 427 level. BYND might squeeze. So many haters. Not really a hater of it. I just don't like the business. Not like I'm shorting Beyond Meat right now, especially. Maybe it does squeeze up. The problem is you got so many bag holders in it that are going to say exactly what you just said, Jake. And maybe you're right. I don't know. I'm not going to buy it. I just think the business is risky. And there's not enough people that are actually interested in it. Maybe where it's at now at $2.40 a share. But... Honestly, Impossible. I had some Impossible tacos at Disney World. They were kind of good. They were kind of good. You know, they tasted good. I never ate them again, you know, but because I like burgers, you know, but they were good. All right, guys. So listen, I see 1,100 people here. We don't have any 8:30 data today. The JOLTS job report's at 10 o'clock. And so it's kind of boring until then. We got about an hour and a half until JOLTS. I appreciate you guys being here, though. You know, 30-year mortgage rates went up today. Market has kind of done nothing though over the last hour. We're big range, but we're sideways. Market's mostly propped up. I'm sorry for the Christmas music. Market's mostly propped up after Google won the lawsuit, basically, and they don't have to sell Chrome. Apple's benefiting from this, so Apple and other tech are up on it. They're elevated. Nvidia's even slightly green. Still at 172s, but yeah, that's the market right now. Yes, Andrew, that's why. Kraken says that it has identified an issue originating from funding provider, according to the banking circle. Does anybody still use Kraken? I used them way back in the day, but I don't use them anymore. Anybody still use them? My brother does. I do. Yep. All right, so we got some Kraken users. Gold again broke all-time highs this morning. Market news has been a little light. I think most people are waiting on the JOLTS report. Hey, what's up, Chef? Canadian labor productivity rate showed up at negative 1%. Versus previous 0.2% positive, revised at negative 0.1%. Look at the NASDAQ fall here. Weird. Right, we're getting a reaction. We don't have any 8:30 market data. Oh, we got Waller on TV right now is what's going on, I think. Chris Waller. Let's see what he starts to say. Maybe the Canadian labor productivity rate is making people fearful. But look at this drop. Right about 420. Now we're at 419s, 418s, 417s. OPEC August crude output rose by 400,000 barrels per day. Anything else? I'm seeing that news come out. This drop. Pretty significant drop all of a sudden. Nvidia's fallen down a little bit here. Google's actually still pushing up though, so this is mostly Nvidia's falling down. Apple pulling back slightly. AbbVie announces updated results from phase 2 NCORE and LH6 study. NHL6 study evaluating the potential for outpatient monitoring of one of their drugs in patients with relapsed or refractory diffuse large B-cell lymphoma. Look at this drop all of a sudden. Google is up because they want a favorable ruling. They don't have to sell Chrome. That's the news on Google this morning. Non-farm payrolls world is much more important than JOLTS. But JOLTS can move stuff too. JOLTS is a labor market preview. So. I don't know what to do right here. We've had big drops, buys up, big drops, buys up. I think it might make people think it wants to come back, but maybe it just drops here. I don't know. Either way, it could go the opposite way. If crude is moving, not really. It could be the Canadian labor productivity rate at -1%. So really, most important data this week is Friday. Yes. Yes. All right, look at this red showing up in markets. Yeah, I mean, the biggest report this week is going to be Friday's labor report. It's the first labor report we're getting from the last one that was revised downward for May and June and also showed a pretty weak month of July. We're going to get the August report today. Or no, I'm sorry, on Friday, we're going to get the August report, which is very relevant. We're going to get the prelim numbers tomorrow called the non-farm employment change data. We got jobless claims at the same time as well. But the big report, don't get it twisted, is Friday this week. Friday's the big one. It's going to influence a lot of stuff. Rate cut odds, everything. So tune in here Friday, 8:30. We'll cover it like we always do. But yeah, don't get it twisted. Friday is the big report you want to pay attention to. All right, guys, so we ended up dipping down here. See if we get bought up now. I don't really trust any of this, though. Market's too consolidated sideways with big range. This is what happened here, too. Got bought up. Could be algorithms doing this, too, but... ECB meets banks to discuss how their loan books are issued according to Bloomberg. No, it's not going to affect it. Yeah, I gotta be careful today. These are big range candles, but whippy back and forth, like up down quickly. Like they're kind of trapping a lot of traders, picking up, you know, liquidity and trapping traders. So just be careful today. It's a hard day to trade. I traded once this morning, lost, and now I am kind of sitting on my hands waiting for us to get close to the opening bell, hoping that the liquidity that we get as we get closer to the opening bell is gonna help make the direction more predictable. I mean, we're sideways anyway, but yeah, kind of whiplash today in markets. It's hard to trade, and there's some days that are just going to be like this, chat, so just be careful. Also, you want to help support the channel, check out Top Step. Great way to help support the channel. No PDT in futures. You can day trade the S&P, the NASDAQ, the Dow, the Russell, gold, some currencies. Most day traders lose money, and so if you put up your own money in thousands of dollars, you're probably going to lose it. Let's just be honest here, especially in the beginning. It makes no sense to do that. Instead, try Top Step. They give you a 50K demo. You can make 3K. If you can make 3K in profit without losing 2,000 first, following their rules, They fund you 50K with a 90% split. There's also a 100K challenge, 150K challenge. The risk is noticeably less versus thousands of dollars in risk. $50, $100. It's not the end of the world if you fail it. If you pass it, you get to keep your first 10K and then 90% split afterwards. Very similar to funding your own account. It's the best of both worlds, in my opinion. Less risk, similar reward. And they pay out millions, fund thousands. Great way to learn how to day trade when most day traders lose. And yeah, just a great way to learn. Great way to learn. Understand all this stuff on screen. I can't guarantee anything. I'm not an investment professional. I'm not liable. If you lose money, understand all this stuff on screen. Don't copy me. They're a sponsor of mine. I get paid by them. I'm biased for sure. Top 3 most biased ever. Don't copy me. Here's the link if you want to check it out. Markets are whippy, Nvidia's sideways, Google's up a lot, Apple is up a lot on the day as well. It's almost 240s. Gold broke all-time highs. Hey man, JOLTS forecast 7.3 million. If they come in at 7 million, how can the markets react? I mean, the markets can react however way they want to react. We could react positively to that. We could react negatively to that. I would assume that like a weaker labor market shows more fears for like recessions and labor turning. But again, I think right now we can kind of see like good is bad, bad is bad, or we could see good is bad. It doesn't matter. Like anything could happen. But that would be a weaker sign for labor for sure, and more likelihood of rate cuts if JOLTS comes in lower than expected. Unless we break 112 and stay there for a while, we're not breaking anything. Yeah, I mean, top 40, again, Top Steps is a sponsor of mine. It's fun to say like a passing comment, but just to say 5 or 6 comments. All right, bro. We get it. You don't like them. That's okay. JOLTS important, but Friday's the big one. Yeah, I mean, JOLTS is like a preview of Friday. They're not always super correlated, but sometimes they are. Like last time, JOLTS has honestly been more accurate in terms of revisions than a lot of the payroll reports have been. You know, so like JOLTS had payroll show up at negative 33,000, and then the labor report that we got, you know, right afterwards showed strength, right? And then sure enough, what happened the next labor report, we showed big revisions. So the JOLTS was kind of right the first time. And the way they pull the data for JOLTS is more accurate. And so payrolls are based off of surveys. And that's what the president was getting mad about, is the accuracy, but it's hard to get it accurate whenever it's based off of surveys and businesses lag and they're slow and all this different stuff, right? But the ADP data, or was it JOLTS? Maybe I'm talking about ADP data. I'm sorry, not JOLTS. I'm talking about ADP data. But yeah. Some of the prelim data, like tomorrow's ADP data in JOLTS, have been a little bit more accurate than the actual payroll data. Payroll data is still going to move markets more, but I digress. When you trade futures, how is it different to options? It's wildly different. I mean, they both use the word contracts, and the contracts do expire in both of them. The way you have to look at futures is futures contracts expire quarterly, right? So every quarter you got to update your contracts to the most volatile or the most liquid contract in futures. Option contracts are different. When you day trade, futures are very similar to day trading. Like futures are a lot of the time a shorter term trading vehicle where you can day trade them. It's very similar to day trading stocks in that regard. You can buy market, sell market, watch the chart move, all that different stuff. It's very similar to day trading stocks. Options, you know, you got the Greeks, you got all these different conditions that you need to focus on to understand. Options market, I would say, is far more complicated in terms of learning how to do it right. But maybe because of that, you can find some edge in options. I don't know. I'm not really a big options guy. But they're just two wildly different things. Sure, they're both contracts and they both expire, but it's different markets for sure. Chop chop. Yeah, I'm not trading this right now. It's too sideways. Google's still pushing up though. It's at 226. So this one's looking pretty solid. Governor Waller says the Fed has little control over the long end of the curve. The 10-year yields are more anchored. Markets are pricing for the Fed cuts over the next few months as a reasonable estimate. 10-year yields are pricing in a little bit of a Fed rate cut. And so this is something that Waller just said on CNBC. Yeah, so Fed Governor Waller says the Fed has little control over long end of the curve. 10-year yields are more anchored. Market pricing for Fed cuts over the next month is a reasonable estimate. 10-year yields are pricing in a little bit of a Fed rate cut. Yeah, look how sideways the NASDAQ is. I think the whole market's fearful of the labor report we might get of JOLTS maybe today. We got some fears coming through. Yeah, there's an activation fee once you pass it. Did you take any other martial arts besides jiu-jitsu? I've off and on, yes, but not nearly as much as I've trained jiu-jitsu. Alright, so we're at 424s. Again, we're not really holding any direction. It's hard to make money. I mean, maybe a slight downward trend. You can kind of see like lower highs here coming in. But it's not, I don't think the edge is necessarily high enough to really catch it accurately. Yeah, I'm looking at Waller speaking right now. Again, he basically said we should cut at the next meeting. I've been clear. I think we should cut at the next meeting. I had no need to go in lock sequence for rate cuts. We could see multiple cuts, whether it's every meeting or every other. We'll need to see what the data says. I see multiple cuts over the next few months. Inflation expectations are anchored. We want to get ahead of having the labor market go down. Essentially, he's saying we want to be proactive. Yeah. Chopik also said we are working for a new steel and aluminum safeguard in 2020 or after 2026. Bank of America survey says worker financial well-beings fall. Bank of America survey of 1,000 full-time U.S. workers shows only 47% feel financially secure, down from 52% earlier this year. About 85% carry personal debt. 26% sought financial help, up from 13% in 2023. And 77% are worried about the economy. You think there's an AI bubble? Oof. I don't know, bro. I think it's possible we're in one. But I also think it's possible we keep running up. So I really don't know. Yeah, I mean, that's probably true, Drop. Do you guys think we should cut rates? Let me know in chat. Are rate cuts the right move right now? Let me know. I think we could probably argue one, at least. I think we probably should have cut last month. But no? Yes. Yeah, I mean, listen. I get it. Inflation's a risk. But I think we can cut a quarter basis point or a quarter percent, and the risk doesn't go increase that much for inflation. But I also think it's somewhat ambiguous. I think we could end QT and help bring mortgage rates down more, especially at MBSs. And you can kind of see people are pretty split on this. Like, the risk of cutting rates is inflation. But if the labor market starts to look weak, you know. The bubble, yes, but things are going to get weird. People are going to try to stay on top of it. Yeah. All right, we're going down here. We are at 425s. Yeah, so Waller says inflation will approach 2% within 6 to 7 months. That rate cut pace can be changed. He said my other colleagues have a much higher neutral rate. Like what they consider neutral in terms of the federal funds rate is noticeably higher. He said don't see recession but slower growth. The Fed's independence is critical and believe we have an independent Fed. We have not had an interview for the Fed chair job yet. My other colleagues have a much higher neutral rate. And again, Waller says we should cut at the next reading. Let's see what yields are doing on this. Nasdaq's so sideways here. I think it's hard to trade. Yields have been dropping this morning, showing kind of a lower interest rate sentiment. Again, the 30-year chopped 5%, which is longer term. If they think rate cuts are going to be stimulative, it might make longer term yields actually go up, which they did early this morning. What was the, David says AI is replacing entry-level jobs, yet the Fed has done nothing to save the free fall. My cousin and his friends graduated from Columbia this summer and couldn't find a job. What was their degree? Yeah, go Tigers. That's right, Jamie. How about that LSU win versus Clemson? People are mad about it too. You love to see it. You love to see it. That was a stressful game to watch, though. All right, guys. Almost 9 o'clock in the morning. So sideways, guys. I don't know what to do with this. All I know what to do is not to trade this, to be honest. Still looking at what Waller's saying. So the CNBC interview just ended. He said tariffs or attacks will lead to slower growth this year. I have not had an interview for the Fed chair job and don't have an interview scheduled at this point. I don't see a recession, but slower growth. And then that's basically, that's what Waller said this morning. So Nasdaq, very choppy, very sideways, not really doing anything. We got the JOLTS report going live at 10 o'clock. You guys red or green today, right now? I know it's kind of boring, but there's nothing else going on. Bitcoin's dropping. Is it really? Let's see. We're at 111 still. Yeah, Bitcoin falling down here. Attack the range. This range right here, bro. I'm good on this range. That's too small. Like, that range is way too small. I don't know how to even attack that. It's way too choppy. Green, good. Google and Apple holding up the market. Yeah. Bitcoin is doing an interesting pattern in bar replay. Yeah. Risk management can be easily replaced by AI, 100%. And I think that's the future, is algorithmic trading, of course. I think it's very obvious. All right, so now we're starting to fall back down. We're under that 425 level. Yeah, that's definitely a big business pawn for sure. Right now. Gold. Again, gold's still pretty close to all-time highs. Gold tapped all-time highs. It's starting to creep back up there. It's at 36.15. So gold may be something that looks interesting. Dead cat bounce. Yeah, I like dead cat bounces. All right, guys, we got the JOLTS report in about an hour here. I'm going to put a timer up now. And we're also going to do another poll here as the market chops sideways. We got about an hour left, give or take. Nasdaq's very flat. I kind of want to short here. And look, I'll try to take a little trade right now, but it's a risky short. Hold on, wait. I'm gonna wait. I'm gonna wait. Redbook came out at 6.5%. Its previous was 6.5, so it's unchanged. Gold new all-time high? Maybe spot gold. I'm looking at gold futures. Yeah, silver's been pumping. Seen that yesterday. So I did get into a little trade on one of my other accounts here. And we're green, but not really green. We'll probably hold this break even. Kind of shorted the top up here. If I get filled at the bottom. Alright, we took half off. We'll hold the rest break even. We're still up about 20 something ticks, so that's good. There we go. Nice. I'm gonna try to cut it. I'm gonna be quick shorting. The range is too small to really try to attack too much. So the Ukraine president said Russia's showing signs that they want to keep fighting. What is this doing to oil? Looks like I got out just in time there. Gold's still creeping up to almost all-time highs. Looks like it's going to at least make a test of it. This gold currently is at 3551. Could have held this short maybe a little bit longer. There's gold futures breaking highs. 36.20 new all-time highs. All right, gold futures just broke all-time highs. NASDAQ falling down a little bit here. We got one of the Fed members speaking, Muslim. He says that current restrictive monetary policy stance is in the right place given the data. So maybe that's influencing things. Recent data showed downside risk to the labor market increased. Modestly restrictive policy is consistent with economic data. Tariffs will work through the economy over 2 to 3 quarters. I expect the labor market to cool and stay near full-term employment. I expect inflation to edge back to 2% by the second half of next year. All right, so Google is ramping up AI chip competition with NVIDIA. According to the information, Google struck a deal to put TPUs in another cloud provider's facility for the first time, and in doing so would have less room in data centers for NVIDIA chips. Google's still pushing up. This data might influence markets. See that news in chat. Labor market data is hard to predict. All right, gold's new futures highs is 36.2150. The Fed's Muslim says weak housing market poses downside risk to the economy. Yeah, but he's kind of contradicting himself. He's basically saying, hey, there's downside risk to labor, there's downside risk to the economy. But then on the other end, he says that the Fed's rate is modestly restrictive. And so, I don't know. He's kind of contradicting himself, I think, a little. That I expect growth in the second half similar to 1.4% in the first. Do you guys agree? I think maybe their point is that the risks are too much for inflation. Like we have downside risk to inflation and risks to, or we have upside risk to inflation and downside risk to the labor market, right? But in the Fed's mind, at least over the last couple months, the bigger risk is inflation. Yeah, Google pushing up on this news. It's kind of dragging the NASDAQ higher here. NVIDIA reacting negatively to this news as well because it has to do with NVIDIA chips. And we're not really volatile. We're pretty sideways. I mean, Google, Apple are propping the market up right now, but yeah, remember in 55 minutes we got the JOLTS report. NASDAQ finally starting to do something, but we're really getting back to the top of the 2-hour range here. So all right, so we're starting to creep up again. Maybe this news is benefiting tech, except for NVIDIA. It's Giving 2008. I can't get behind the whole It's Giving phase. It sounds ridiculous. Anybody that says It's Giving seems like they're a freaking sorority girl, okay? And maybe you are. But I cannot seriously, non-ironically use the term It's Giving. I'm too old. I'm not cool enough, maybe. But I just can't reasonably use that phrase. You know? It sounds like a 20-year-old sorority girl saying it. You know what I mean? I just can't. I can't do it. Job market, it can always recover. Inflation never goes away. Yeah, for sure. I agree. Inflation's a risk. Yeah. I just can't freaking do it, man. All right, NASDAQ's pushing up. We're at the top of the range. NVIDIA down to 171s. Gold's still testing all-time highs here. Just broke all-time highs again at 36.21.80 for all gold futures. Yeah, follow me at Beginner Trades. At Beginner Trades. We appreciate it. All right, so the Bank of England members are speaking at the UK Treasury Committee in about 7 minutes. Again, we're so sideways here. There's nothing to really do. I'm green on one account, red on the other. One of the things I do that generally helps me with like risk management is if I lose like any type of significant amount in one account, I'll switch to another one. And if I lose any type of significant thing in that account, I'm probably just going to hang it up for the day. And so that helps me avoid big losses. Just try to keep every account's losses as small as I can be. I think that makes the most sense. Oh, wait, is this actual music? AI bubble. A lot of people are talking about an AI bubble right now. And I don't know. Again, the internet crash was the big crash of the last 30 years. But the internet was that next big technology. And so maybe that's the case with AI. Maybe AI is that next big technology. I think it probably is. But maybe we do have a bubble when we crash. I don't know. The dot-com crash happened for very specific reasons, though. So, like, the dot-com crash happened. And maybe we have similar reasons to think we're in an AI bubble. But the dot-com crash happened because, again, like, I've said this story before, but it's an important story, I think, to understand the history of the dot-com bubble. I use Netscape as an example. Netscape was like one of the first browser companies. They sold a browser in a box. You could go to a store and buy a browser, install it into your computer, and then it would show you where to go on the internet and use it, like a very early version of a browser. And like the standard prior to Netscape going public was that you had to have a certain amount of profits. But Netscape IPO'd pre-profits, and they made billions of dollars doing it as a public company, right? And eventually, like, again, little history, Microsoft ended up wanting to license with them, deal with them, basically, like wanted to partner with them, and they said no. They didn't want to deal with Microsoft, and Microsoft was doing some sketchy stuff, no offense, but Microsoft said okay, and then started offering their Internet Explorer browser free installed into their operating systems. And within a few years, Netscape was over. They went from billions in valuations down to a couple million by the late 90s, and eventually AOL bought them for very cheap, very cheap. But the point is, a lot of companies IPO'd that had .com at the end of their name in the 90s, and by 2000, a lot of these companies, people realized that these companies really weren't making the money to justify their valuations. And by 2000, we had one of the largest. The crash was big, but we had a long bear market that followed it, is really what it was. And that's the .com crash of 2001, 2000. And then we kind of like led into 2008, right? So we were still rebounding, coming back up, about to test highs again, and we tested highs again. And then 2007, 2008 happened, and that bumped us right back down. And so because of that, we had this really long bear market of like 15 years because we had two major economic and market catalysts that were bad that happened within a decade of each other. And that kept us down a little bit longer than normal, I would say, for crashes. Now, whether we're in that situation now where companies are IPOing and overvaluated for AI systems, we can always speculate on it. Doesn't necessarily, I don't know. I don't know. I think sometimes when we're at all-time highs like this, we can keep running. I also think we're very early in the AI technology, but you could also say that the internet was really early in the technology in the 90s. Of course, in hindsight, it certainly was. So I think there's an argument for a bubble. Does it mean we're going to pop? Not necessarily. And so we'll see. Big money getting involved with things, they can prop things up. And so that's what you have to understand, is that big money doesn't want us to crash most likely, and they can do a lot of things to prop us up. Are we in a bubble? Yes or no? Let me know. Are we in a bubble, chat? Let me know. Maybe. Are you talking about my mug, bro? I can't remember who gave me that mug. A bit, yes, we are in a bubble. Yes, no, no, yes, no, no, no. The no's showing up. What kind of JOLTS report does it take to drop or raise the mark? It takes a big miss or a big beat. I'm not saying we're either, like, I'm not even saying we're going to go up if we beat and go down if we miss. Could do the opposite, but big numbers relative to expectations is what moves the JOLTS report. A lot of her housing to come back down. They need to get rid of the 30-year and go with mostly 15. Yeah, I mean, 15 makes more sense in a lot of ways. But financially, a 30-year mortgage also makes sense, right? Because like, you got to think about it like this. Getting a mortgage can be a hedge against inflation. And you might ask how? How can getting a mortgage hedge against inflation? Well, eventually your house, like let's say inflation rises. Let's say you make $100,000 a year, right? And you get a 30-year mortgage, all right? And let's just say inflation grows by an average of, what, 3.5% a year for the next 30 years. All right, so in that regard, your salary right now is $100K, but in 30 years, it should in theory be much higher than this, and money's going to be a lot less valuable. And so 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 30. Okay, so your money is going to about 3x in 30 years, right? Like your salary is going to 3x in 30 years. Your property value will also be rising in a similar trend, most likely. It could drop, certainly. But your property value, unless you're buying it in a terrible neighborhood, should certainly rise at least somewhat of this, right? And so if your mortgage, let's say it's what, $2,000 a month. If you're making $300K, $2,000 a month is a lot less significant in mortgage payments. And so in that regard, like even getting a mortgage, a long-term mortgage, can hedge against inflation in some ways. I'm not saying it's good. You're still eating it with amortization and all that stuff, mortgage insurance, but still, in theory, it should be less significant. If we do it on the other end of that, let's say you're paying $2,000 a month in mortgages, and let's say inflation grows at 3.5% in the same way. Oh wait, hold on. Right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Okay, so in theory, in 30 years, that $2,000 mortgage should only feel about $686 worth in future dollars. So it's going to be a lot less significant of a payment, you know, as time goes on. That'll become more and more. In theory, right? You never know, but we're using probabilities here. Yeah, and buying real estate, I like buying real estate for a lot of reasons, and this is why real estate generally goes up, is because you buy a $300,000 house, average house appreciates about 4%. Let's say you use the 1% rule, and let's say for your $300,000 house, you get about $3,000 a month in rent. That's a little bit optimistic. I would say $2,500 a month in rent. And if your house appreciates at 4% a year, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In 10 years, that house will be worth $450K. You'll be able to get, in theory, about $4,000 a month in rent. And so your rental income will increase. Your house price will increase. And so there's even more to it than that, right? Owning property, there's more to it than that. But there's expenses, you know, there's a lot of other fees, taxes, all that stuff too. But all right, guys, we got 12 minutes. 12 minutes. You think we should charge people who own multiple properties more tax? Listen, humans are already getting triple taxed here in the US. We got to pay property tax, which is obscenely ridiculous. I'm offended at property taxes, to be honest. We got to pay income tax. We got to pay sales tax. We're already getting triple taxed. I don't think we should raise taxes on anybody. I've said it once. I think we should be nicer to millionaires and more strict on billionaires in terms of taxes. Some people might disagree with that. I understand, but yeah, that's what I think. All right, guys, 11 minutes into the opening bell, about 10 and a half minutes. Let's see if we get some good action. The market's been pretty flat. We're starting to see some upward trends, though. NVIDIA at 171.40s. Yeah, I mean, you never know what's going to happen in markets. In theory, if interest rates start going down, property values will rise more. Mortgages will become cheaper. More people will buy. That might boost property values in theory, right? You never freaking know. Who knows how much we'll cut rates anyway, but... Not a real estate professional. I have my real estate license, but I'm pretty sure it's inactive right now. If I had to look at it, I'm pretty sure it's inactive. But I don't know, to be honest. Yeah. I mean, you never know. There's always variance. The Bank of England's Taylor says, my main concern has to be getting inflation down back to 2% target, maintaining monetary policy restrictiveness as long as necessary, but no longer. Lombardelli says she voted to hold rates at the last meeting due to her concerns about the current and expected above target rates of underlying inflation and her judgments of balance and supply demand. This is the Bank of England, by the way. We got 8 minutes left until the open. We'll see what we get. Musalam says we remain squarely focused on following Congress's mandate. I'm seeing this thing that, tell me if you agree with this. It's the Kabesi letter. They said gold is telling the future. The S&P 500 is one of the strongest bull runs in decades, up 1650 points. 1,650 points in under 5 months. Meanwhile, gold's year-to-date return just hit 37%, 4 times more than the S&P year-to-date. Why is gold crushing stocks in a bull market? They're basically saying gold prices are now up 100% compared to a 67% gain in the S&P. Despite AI, the biggest breakthrough in tech since the internet, stocks are lagging gold. They say when you take historicals into it, it's even more strange. Gold is a safe haven asset, historically like bonds, which rises in times of uncertainty. But basically, they're saying is gold leading the way to a correction. I don't know. Markets are pricing in higher long-term inflation and more deficit spending. Central banks now hold more gold than treasuries for the first time since 1996. You guys agree with this? Again, a lot of people are arguing we're in stagflation right now, which precedes a recession. I don't know. All right, guys, we got 6 minutes left. Yeah, so again, Fed's Musalam says he remains squarely focused on following Congress's Congress's mandate Fed framework update is more forward-looking. Data integrity is key for the economy, according to Newswires. Bitcoin went up a little bit this morning, and the last time I checked, it was down some. Hold on. Yeah, Bitcoin went up to 112.5 on futures, down to 112 now. So Bitcoin is essentially like flat on the day. Hasn't done much. Yeah, we got the JOLTS report in about 30 minutes, chat. NASDAQ pulling back down. Very flat day. We're not really doing anything. Google's still pushing up. Google's had some pretty good news all around this morning. It's boosted Apple up. Hey, let's end this poll. Let's ask people. Are you bullish or bearish for the opening bell? All right, so vote on this poll. Again, vote on this poll. Are you bullish or bearish for the opening bell? Okay. There's the poll. Poll is now live. You can vote on it. We got 3 minutes left. The Google news is that they want a favorable verdict. They do not have to sell Chrome anymore. Market's almost completely flat heading into the opening bell over the last 2 hours. Yeah, 10 a.m. the JOLTS job opening report, though, so be ready at 10. Bank of England Governor Bailey says the situation with the Fed is serious and I'm very concerned. Yeah, I mean, they're not selling it to another company. You know, there were rumors that they would have to, or there were fears that Alphabet would have to sell Chrome, their browser, to another company to break it up. And that is no longer going to happen, according to a judge. Marvel dipping down a little bit. We got small enough size to where this is relatively insignificant. I could also add to it, but it depends on what happens over the few days. We're in a small position. I'll think about adding to it. Yeah, gold at all-time highs. Correct, Maria. Gold's still pumping all-time highs right into the opening bell here. Interesting open, man. I would say my thesis is bearish today, but I have no freaking idea. If we go up, don't reference this and say, like, John, you were wrong. I mean, you can, I guess. But honestly, we could do anything today. I don't freaking know. We could sideways trend into a JOLTS. I think that's possible too. But I think gold pumping up is risky. Thank you, Rusty, for the donation, brother. I appreciate it. Yeah, all good, Maria. All right, guys, here we go. 30 seconds. Hit the live button next to the play button. If you put it in 2x speed, you won't be delayed. No, it's just futures. But the futures, you can day trade the S&P, NASDAQ, Dow, gold right now, especially. All right, so here's the drop. I think gold pushing up's a weak sign for markets, but I don't know. Gold has also moved in a macro direction with markets as well. All right, there's the bell. Again, hit the live button, put it in 2x speed if you're delayed. You won't be delayed anymore. All right, guys. All right, so we got an open here. Gold's starting to pull back at the opening bell. Here we get JOLTS job report in 29 minutes, 28 minutes. Here's the red, though. There's the drops coming through. All right, we're about 2 minutes into the day, into the open. Big contraction in Google. You also want to watch maybe Apple and Nvidia, just because these are the ones that are the most elevated today. Look how high Apple is. Now, we said red at the open. Maybe we were right. Maybe too early to celebrate, though. Nvidia's dropping too. Yeah, we could have a big range, but sideways. Big bounce. Let's see if we rebound back up now or what we do. Nvidia coming back down a little bit. Google ran into that 200 exponential, bounced right off of it. Look at that. Apple's still red though. We're starting to see some green candles coming in. You guys red or green for the open so far? Anybody traded? Looks weak, but you never know. Google's honestly starting to show resilience. Yeah, new iPhones dropping next week. Slim version, right? All right, Apple just cracked lows. But Google's still popping back up, and Apple just retraced the whole candle. Now it has a green candle here. Microsoft's ripping up too. It's at 505, trying to go green on the day. I'm tempted to buy this now, huh? We're too sideways. I gotta wait until we get a better trend. Nvidia just turned down crack lows. Yes. All right, Google looks strong. Nvidia looks weak. Microsoft looks strong. So we're somewhere in the middle here in terms of direction. Google's still looking pretty strong here. All right, we're over 5 minutes into the day. Maybe I'll try to short 525 if we get it, but the big retracement. Maybe I'm not going to get a chance to. Red showing up. Apple dropping, looking weak now. I wanted 525s. It got up to 520. Depends on if Google makes another run. Google kind of looks like a cup and handle almost a little bit on a 1 minute chart. Here's the cup. Here's the handle. And so if Google makes another run, we could drive back up, but it's a little bit too unknown right now, I think. Me. Music stop. Yeah, 420. You're correct. Yeah, my bad. You're right. All right, we're dipping down into JOLTS potentially here. Video down to 168. Momentum looks weak, but it also looks like there could be like a liquidity grab at the bottom here with Google pushing up. I'm gonna buy this. I know it's risky. Basically flat right now. Problem is that Nvidia keeps falling. I'm gonna try to add maybe one more contract here on the fall, but all right, there we go. That's 2. There we go. We're green. All right, we took half off there. Now we can basically hold this break even. Less risk. All right, we're out. Love to see it. Quick trades right now. I don't trust the market. We got 20 minutes left until JOLTS. Nvidia bouncing back a little bit. Apple's still looking pretty weak on the day, but Google's looking pretty strong up there at 228s. I think we have a shockingly good JOLTS job report that sends it on a spike, but gets talked back down tomorrow. Yeah, potentially. Sorry for the Christmas music today. That's what we're here for, you know. JOLTS is somewhat important. I wouldn't say it's crazy important, but it can move things. That liquidity graph thesis we had right here made sense, and that's what we did. All right. Alright, I can't do this song. I don't know what song this is. Alright, guys. Alright, guys. JOLTS report. Less than 10 minutes. Nvidia bouncing back pretty steady here. 170s now. Google's still pushing up. Apple's still looking weak, but... Alright, look at this crackdown here in the market, down to 380s. Apple cracked lows for a second. Nvidia's turning back down here. Microsoft, which was pretty strong on the day, is still pretty strong. It's all the way up to 506 right now. It's actually technically green on the day, along with a lot of other stuff. Marvel, which we bought earlier, is still kind of red, but I think I'm just going to sit in this. It's a small enough position where it's a very small trade so far still. And so, yeah. Sideways action here. Maybe we'll get more choppy into... Yeah, remember, so tomorrow we got the prelim NFP data at 8:15 market time, and then at 8:30 we got a whole gang of reports, like a lot of different stuff. So just be ready. Alright, so we did a poll. We asked people bull or bear for the opening bell. Now that we're about 15 minutes past, let's do a JOLTS one. Does JOLTS... Well, I mean, if we're swing trading Marvel, this little drop's nothing. But does JOLTS job openings show up higher or lower than the, what is it, 7.38 million expected? All right, 10 a.m. There's the poll. Vote on that right now. Let me know what you guys think. Microsoft's still holding pretty firm here. Very choppy market. Google pumping up to 230s basically right now. Gold correcting a little bit at the opening bell after breaking all-time highs over and over again this morning. Wait a minute. I don't think we have any. Yeah. Again, JOLTS expected at 7.38 million. 7.38 million. Oh my gosh, I'm talking here. I'm sorry. So we just had another green trade. I'm net green on the day. We're green in 2 out of 3 of our accounts. Sorry. Google pushes straight up. Microsoft up to 508s. Sorry, I've been silent. Sorry, guys. I'm sorry. I didn't mean to. ServiceNow offers 70% discount on federal government AI push, according to Bloomberg. All right, NASDAQ turning down. This is mostly driven by NVIDIA here, because NVIDIA's given a lot back over the last, like, what, 3 days? Look at NVIDIA here. NVIDIA, it's at the bottom of the range now, though, for NVIDIA, but it's kind of breaking underneath it, too. Like, here's NVIDIA right here. It's at 185s at the end of July. It is now at 170s here. So percentage-wise, NVIDIA's dropped significantly. Very choppy range into JOLTS, though. The opening bell happened 17 minutes ago at 8:30 Central Time, 9:30 Eastern Standard Time. JOLTS job report is at 10 o'clock, though. All right, Nestle CEO says there are complaints of favoritism against former CEO. The company did not expect to deal with the succession too soon. Very flat. Google now contracting down a little bit after ripping up all morning. All right, looking at our poll, we asked people, does JOLTS come in higher or lower? Pretty split down the middle, over 100 votes already. 52% think higher, 48% think lower. 11 minutes. 11 minutes here for JOLTS. Yeah, HIMS is ripping up. I'm still in it. Our entry price on HIMS has been at 41. So it is now at 44. Love to see that. We're up a decent amount today already. Still green net positive on my stock accounts, even with Marvel's recent position that we took. NASDAQ's still falling down here, though. I don't know what the market wants, to be honest. Market might want weaker jobs because that means higher probability of cuts and less contradiction in the rate cut odds for September. Market also might fear higher jolts in terms of inflation, but I think that's less likely. At the same time, though, you never freaking know what we're going to do here in terms of rates, in terms of reaction here for the JOLTS report. You never really know. All right, 10 minutes left until the market releases or gets the JOLTS report released to it. So stick around. We're going to cover it as soon as it drops. Put it in 2x speed if you need to. JOLTS expected at 7.38 million. Previous was 7.437 million. So they are expecting a contraction relative to previous numbers. Well, JOLTS jolt the market. Again, 10 a.m. Nvidia bouncing back up, though. Look at Nvidia pop after dropping most of the morning. Almost back to green on the day. Actually, it is green on the day technically now. Nvidia 171s. And you can kind of see how much the NASDAQ is following Nvidia here. Again, NASDAQ dips as Nvidia dips, and then NASDAQ rebounds as Nvidia rebounds here. Google's still pushing up. All right, you guys ready? 9 minutes. Nvidia's still climbing. All right, guys, here we go. NASDAQ's fighting back here. Google up, Nvidia back green. There's Microsoft still pretty green. Bounced right at the previous closing price at about 505. And if you haven't already, check out Top Step. Great way to help support the channel. No PDT in futures. You can day trade the S&P, NASDAQ, Dow, Russell, Gold. Great way to learn how to day trade. Most day traders lose money, and so it doesn't make any sense to fund your own account thousands of dollars trying to look cool in markets. You're probably just going to lose it. Instead, it makes way more sense to try this. It's $50 a month if you're learning how to day trade. You can day trade the S&P, NASDAQ, Dow, Russell, Gold, currencies. No PDT rule. Great way to learn how to day trade. Again, they give you a 50K demo. If you can pass their test, they fund you. If you fail, you lose $50. It's not the end of the world. It's the best of both worlds. They're a sponsor of mine. I'm biased. I get paid by them. I try to be honest about it. I get paid by them. Super biased, but genuinely useful for traders. Here's the link. Check it out. You can see it pinned at the top of the chat as well. Is JOLTS dovish? A dovish JOLTS would be a weak JOLTS job opening report. So you have to think about it like this. The JOLTS report shows expansion of jobs. How many job openings, how many businesses are doing well enough to hire new people is essentially what JOLTS is. It's the JOLTS job opening report. And so a stronger than expected reading for JOLTS signals a stronger economy, labor market. You know, a weaker than expected reading for JOLTS signals a weaker economy, a weaker labor market, less business expansion is what this is. And so, yeah, I think the market's just sideways into this report. I don't know how much we're going to move from it, but I think the market's just sideways leading into this. Well, if the labor market's weak, the labor market's weak. I don't know. Look at that 425 level here. Rejected. Coming back down now. Nvidia's falling back down again. You can kind of see the market's leading Nvidia a little bit, or Nvidia may be leading the market. 6 minutes chat. Yeah, I don't know if JOLTS are going to have that big of an influence. But it's important to watch. We'll see what happens. 6 minutes. NASDAQ coming all the way back down here. Yeah, CPI next week's big too. We'll see where inflation really is at. PPI inflation big next week too. I would say PPI, people are going to be paying attention to PPI. They're also going to be paying attention to CPI as well. But the PPI report was terrible last time. And so I think because of that, more eyes might be on the PPI report next week. But we'll see. The labor report this week and then the prelim numbers tomorrow at 8:15 are actually really important. And so we got jobless claims at 8:30 tomorrow. Import-export data tomorrow at 8:30. We got a lot of stuff coming out the next 3 days. Any chance they cut 50? Not right now. That's always subject to change depending on the data. We get like really weak labor data. Maybe we'll have some odds for a 50 basis point cut, but it's not very likely. Not necessarily, Mo. Hope you don't mind me calling you Mo. I have a couple friends named Muhammad, and I usually call him Mo. You know, but not necessarily. I think, you know, I think, there's some signs of that, but I don't think it's over. Like, I don't think it's extensive signs of that, to be honest. I think the Fed will probably be cutting rates next month because of the labor report revisions that we saw in the last one. Yeah. And so I think the labor report revisions that we got last last month, that's what's pivoting the Fed to more easing. Because the labor report revisions were bad. They were not good at all. Labor reports shown signs of weakening. And then on the 9th, so next Tuesday, same day as PPI, I think, or no, the day before PPI, we're supposed to get another benchmark revision for the labor data too. So I think a lot of that stuff's going to be in focus. And you know, as we get closer and closer to the Fed meeting, it's going to be less significant because they're going to be less likely to change their decision the closer we get to it. But it's still relevant to watch. Yeah, Google's up after basically they came out with a verdict that they do not have to sell Chrome. You know, there was a ruling that they might have to break up Chrome, and then they got a verdict from a judge saying they didn't have to now, and that's why it's up. It's dragging a lot of stuff up. Apple specifically up today too. Although Apple dropped a lot at the opening bell, kind of compensated a little bit. All right, guys, 3 minutes. Yeah, I saw that, Lee. I didn't agree with it. I think he's trying to sound optimistic. I think most dollar stores are going to go out of business within the next 10, 15 years. But that's a long time. Maybe they'll make money until then. I don't know. I just don't think a lot of people, I think most of the older population might shop at dollar stores. And I think as they get older and older, they're going to do it less and less. And then we'll see less sales dry up. Mail order shipping becomes much more convenient. And a lot of times they're shipping the same type of stuff that they sell at the dollar stores. And so I think that's bad future outlook for them, but what do I know? I might be wildly wrong. I don't freaking know. Him's pushing up though, so Him's looking good. Might take just a piece of my Hims trade off just because I'm still in some of it, and yeah, we just took a little piece off. All right, guys, here we go. We got 2 minutes left. All right, remember, guys, hit the live button next to the play button. So that wasn't just in about Governor Waller. He said that about an hour and a half ago, just to clarify. Also, hit the live button next to the play button. Put it in 2x speed. You'll be caught up. You won't be delayed on the stream. Make sure you're not delayed. We got the data coming soon here, chat. 2 minutes. Here we get 2 minutes left. About a minute and a half now, actually. Here we go. At 2 minutes, 7.38 million is what's expected. Again, 7.38 million. We got about a minute left. Bull or bear on this report, guys. Looking at our poll number, 52% think higher, 48% think lower. So we're pretty split down the middle. Google just broke highs of the day again, up to over 230s. Bullish, yeah. 45 seconds. This timer's a little bit early. Ignore it. We still got 30 seconds left. Again, hit the live button next to the play button. Put it in 2x speed. You won't be delayed. Final answers. 25 seconds. All right, guys, here we go. All right, here we go. 3 seconds, 2 seconds, 1 second, and here we go. Here's the report. Waiting for JOLTS job opening 7.181 million. 7.181 million, weaker than expected. Again, 7.18 million versus 7.38 million expected, weaker than expected. Again, previously it was 7.357 million, which was revised. The JOLTS job report is out. Again, factory orders also fell 1.3%. 1.3%. JOLTS showed 7.18 million. The market's honestly reacting positively to this. My guess is yields are going to be down, which means that the market thinks there's a higher chance of rate cuts with the weaker JOLTS numbers here. Yeah, yields are down. Look at the yields. Look at yields drop on this report. So maybe people getting optimistic on rate cuts. Look at this. Look at yields fall. Sometimes the first move is the wrong move, so just be careful. But I'll put this data up on screen. But yeah, JOLTS showed 7.18 versus 7.37 expected. And there's the numbers. Let's see if this makes the market continue to push higher here. Bond yields are down on this report. What I'm showing right now, let me look at them. Hold on, where's yields? There they are. Yeah, they're down. I mean, look, here's yields crash, basically. Again, shows more of a need to cut rates, right? So lower interest rate sentiment, i.e. yields fall. Yields and interest rates, especially 10-year, follow each other. And so if we have a lower interest rate sentiment catalyst like the JOLTS report coming in weaker than expected, yields in turn are going to fall and bond prices themselves are going to go up. That's what you see currently. Yields are falling down. A lot of it was baked in prior to this, but yeah, we're seeing yields head back down. A weaker JOLTS report signals that, as well as factory order should have been negative 1.3%. I mean, a little bit better than last time, but still. Yeah, rate cut chances just went up, basically, is what yields falling, 10-year yields means. Essentially is what it means. Again, first move could be the wrong move. Taking a look deeper into this report. All right, so let's read this. Okay, so what we see here is that the number of job openings was little changed at 7.2 million in July. The Bureau of Labor Statistics over the month, both hires and hire separations were unchanged at 5.3 million. Within separations, both quits 3.2 million and layoffs and discharges 1.8 million were unchanged. This release includes estimates of the number and rate of job openings, hires, and separations for the total non-farm sector by industry and establishment size class. Job openings include all positions that are open during the last business day of the month. The number and rates of job openings were little changed at 7.2 and 4.3% respectively. In July, the number of job openings decreased in healthcare and social assistance, arts, entertainment, and recreation, and mining and logging. In July, the number of rates of hires were unchanged 5.3 and 3.3% respectively. The number of hires increased in other services at 86K. And yeah, June revisions. The number of job openings from June was revised down by 80,000 to 7.4 million. The number of hires was revised up by 63 million to 5.3. And the number of separations revised up by 281K to 5.3 million. The number of quits was revised up by 67,000 to 3.2. And the number of layoffs and discharges revised up by 192,000. So that is the JOLTS report. NASDAQ likes it. Yields are down. Markets are up. Again, if you want to check out Top Step, beautiful way to help support the channel. I appreciate the love. Thank you guys so much for the stream. And we're green in most of the accounts we're trading on today. Most of them, we're green. So again, we will see what we get. Hold on one second. Let me check something here. Hold on. Bostic is also speaking right now, just to clarify. That might influence things. Yeah, if you want to check out Top Step, beautiful way to help support the channel. Bostic speaking right now. I'll put the link up for Top Step one more time. They are a sponsor of mine. I am biased. But it looks like markets digested this data is good. It means a higher chance of cuts. If we take a look at rate cut odds, still at 91%, but yields are down. Look at this drop in yields. So we will see what we get. Remember, early tomorrow. Chat, early. It's weaker than forecast. The JOLTS report, that is. Early tomorrow at 8:15 a.m. Eastern Standard Time. We get what's called the prelim. We get what's called the non-farm employment change data. It's a prelim NFP report is what it is. It always drops 1 to 2 days prior to the NFP labor report, which is this Friday. We also have jobless claims at 8:30. That's going to show us another picture of jobs early in the morning tomorrow. Look at Hims rip up. You love to see it. I'm still in some of it. But yeah, that report drops tomorrow. Y'all be safe. Be careful. Stay safe in these markets. It's a fun time for markets right now. So y'all just be careful. As soon as we close this stream, it's immediately going to bring you to our next stream here. And remember, guys, if you don't stay on my next stream for 24 hours until tomorrow morning, I can see it. You guys don't like me if you don't sit there for 24 hours. I'm expecting you all to sit there for 24 hours, guys. All right. Hey, I love you all. Y'all be safe. Be safe. Again, not an investment professional. Understand all this stuff on screen. Can't guarantee anything. Don't copy me. No idea what I'm talking about half the time. I'll see you guys later. Again, as soon as I close the stream, it's going to redirect you to the next page, the next stream for tomorrow morning. If you don't wait there for 24 hours at your computer, I'm judging you for it.